The term brokerage account has been thrown around by finance people for ages, but what is it? In this video, we break down exactly what a brokerage account is. Hey, what's going on, everyone? My name is Maoli Vodi with financiallypresent.com, your one-stop shop for investment and education related to finance. And today we're talking about brokerage accounts. A brokerage account, well, let's take it back. A broker would be someone who transacts or buys and sells on the behalf of their clients. They do that business, they conduct that business at a brokerage firm. Examples of that company would be TD Ameritrade, Charles Schwab, Fidelity, E-Trade, and the list goes on and on and on. And obviously, fees are associated with this, but they have gone much lower over the years due to technology. A brokerage account can be held at any one of those brokerage firms, and this is where you would buy securities. Securities are investments such as stocks, mutual funds, exchange-traded funds, CDs, options, and all other types of investment instruments. And this is really, really key, so I want you to pay attention to this part. One of the tricks to understanding how these firms work is knowing that banks cannot sell brokerage products, okay? But brokerage companies can sell bank products. And the reason why is because when you invest in a bank account, the idea is that you don't lose the value of what you have. You can only gain, and the rate at which you gain your investment growth is either slow or fast because of interest. But in a brokerage account, the value of your investment, you may or may not lose the actual principal, the money you started out with. And it's important to know that that is a possibility with a brokerage account that's not available in a bank account. But because of that risk, there's generally more reward. So the next time you happen to stumble into a bank, you can realize that there's going to be a clear line between what part of the bank is actually the bank and what part does the brokerage services or the advising services. They have to be clearly delineated because the two are separate businesses. They're related, but they have to be separate because one is FDIC insured, that would be banks, while the other is SIPC insured, and that would be brokerage firms. If you go into Bank of America and you want to place a trade, you're going to have a Merrill Edge account. Likewise, if you went to a TD Bank, you can't just buy shares or mutual fund at TD Bank. You would buy it under their TD Ameritrade arm. So now we know there are brokerage companies who have brokers that work for them, and then there are brokerage accounts that they do the transactions in. We have to understand that these accounts have many, many, many types. So it's very common for one person to have 3 or 4 different types of account. Some of the different brokerage account types would be an individual account, a joint account, a trust account, an IRA account, a Roth IRA account, and so many more. One of the things that you'll need to remember is that these accounts are going to fall into one of 3 types or 3 categories. There's going to be taxable, tax deferred, and then there's tax advantage, as I like to call it. Taxable accounts would include an individual account, joint account, trust account, or even a custodial account. Tax deferred account would be a traditional IRA or a rollover IRA, meaning that you will pay taxes in the future when you're of retirement age. And then tax advantage account would be an account where you don't pay taxes, assuming you follow the rules properly. So it could be a Roth IRA, it could be a Coverdell education savings account, but these are benefit accounts where if you use the money in the right way, when you pull it out of the account or you are of the certain age where you qualify, then you are actually able to use the funds tax-free. The securities you trade in your brokerage account all depend on where your account is located. But with broker relationships these days, a lot of times they make things like mutual funds and exchange-traded funds accessible anywhere you have the accounts. But for a more specific example, let's pretend you have an individual account at Fidelity. You are able to put as much money as you want to into that account, and you'd be able to do whatever type of trading you wanted to. So that includes day trading and using margin and doing options tradings and all levels of speculative investing when it comes to options. All of that can be done in an individual taxable brokerage account. But on the flip side, let's say you have a 401k plan through your employer and it's hosted at Fidelity. It's still at a brokerage account or in a brokerage account, but ultimately there are some limitations due to the 401k tax code. So there's a maximum contribution limit each year that you can put in there. And then there is a selection of mutual funds usually that you'd have to select from. And it's all dependent upon the type of account. So you have different types of accounts at the same institution, but the product availability is a little bit different because of the rules that are enforced on the account. The big takeaway here is that all accounts at a brokerage firm are brokerage accounts, no matter the type. There are many, many types. So what you're able to do with them all depends on the account type and the rules that are enforced on that specific account type. So you wouldn't be expected to be able to trade on margin or speculative options in a custodial account for a child or for a IRA that's used for your retirement purposes. One of the concerns that a lot of investors run into is, what's the best brokerage firm to open up an account with, and what account type should I open up? And sometimes those questions just leave you stuck. If you're not sure, watch my next few videos where I open up some of the most common brokerage accounts and you'll understand what products are available and how simple it is. If you like this video, go ahead and hit that like button, subscribe if you're new to the page, and turn on notifications so that you don't miss out on future content. And until next time, stay present.